Paste the link everywhere.
Oh shit, we got a bunch of people in here.
Yeah. All right, let's give it a couple of minutes for everybody to get their groove on.
Another nice one, USD JPY, man.
Oh, there's a live one.
The
Okay.
nice one, USD.
Oh, there you go.
Yeah, that's working. That's working.
All right, it works. So I can monitor chats. And I muted that one. Shit. And I muted that. Okay. All right. So obviously we're seeing some gaps. So anyway, let's backtrack. How do you start a week? Every week you have to start with one thing. You have to understand what's on the map for the whole week. So today's Sunday. We're doing prep work. Markets just opened up. Futures is still closed. So indices, gold, and all of that stuff is going to open only in 20 minutes. So at 5 p.m., the retail FX opens up. Institutional FX opens up around 2, 3 p.m., so a couple hours prior. But brokers open up later at 5 p.m. New York time because you have volatility, unnecessary volatility, basically. So they for safety reasons they open up a little later when the markets come down a little bit. But anyway, 5 p.m. Sunday open. FX is now open. Now, you start your week very simply. Today's Sunday, so you have to understand what the fuck is on the calendar, what kind of events are happening throughout the week. Because if there is something, for example, big happening on a Wednesday, markets might bid up a price, specifically pricing something in, and then reverse it when the actual news comes out. Hands for the buy the rumor, sell the news type of price action. Happens all the time. All the newbie traders get fucked in the ass all the time with this thing because they don't know. First of all, they don't know that some big event is happening, and all of a sudden you see a spike in price. And second of all, they don't understand that leading up to an event, it was already being priced in. Certain things were already being priced in, et cetera, et cetera. So they are like, oh, these are good news. Let me go long, and the market reverses and goes completely the opposite direction, and that's why. So in order for us to avoid that, we look at the big events that for whatever instrument that you trade. So for example, if you're trading Australian dollar, their FOMC is tomorrow at 7:30 p.m. New York time. If you're not trading Australian dollar, you still should at least see what the fuck their central bank is doing, because once you have a picture of what all central banks around the world are doing, they you kind of it completes a lot of pieces of puzzle what the fuck is going on with the world to begin with. Now, the big starting Tuesday, we're gonna have Empire State Manufacturing Index and PPI. PPI is like a CPI. CPI, which came out last week, is inflation on the consumer products, and PPI is inflation for the producers. So if you have if you manufacture whatever widgets, your cost of acquiring metal or some equipment is that it also rises, and if it rises, then you're going to pass on that cost on to the consumer. That's why it's important to watch the PPI on Tuesday. Definitely a market moving event. And again, there are a lot of these events. So I use this calendar because I've been using it for fucking 20 years. But there are better calendars, and you can just Google. There's a one daily. There we go. This is probably a better one. Dailyfx.com economic calendar tomorrow. Excellent days. So it's a little better, a little fancier, but fuck the fancy shit. I like the the all the yellow events you just completely filter out. As you can see, there's a lot of there's a lot more events. I'm only interested in the red and maybe orange ones, because I don't give a shit about some just don't about irrelevant events, because they probably not going to be market moving events by a lot. So I filter them out. You need to. We're not news traders, so we don't give a shit. We just need to see the big picture, bird's eye view of the where the fuck we're flying. So Tuesday is the big Kahuna day with the PPI, and then for the currencies and retail sales is going to be a big one on Wednesday. If you're trading all these other currencies, you obviously could. We're going to have Canadian. CPI. We're gonna have some Australian news, etc., etc., etc. So, and then the manufacturing index on Thursday, and you can read about what the fuck all this bullshit means, like level of diffusion based on survived manufacturing. All right. It's a leading indicator of economic health. Business react quickly to market conditions, changes their sentiment. So it's basically how the business sentiment measures corporate sentiment towards the economy. So blah 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 blah. And that's it. And if you take a look at the next week, that's when the Thanksgiving is in the United States. So basically, next week we only gonna have a Monday and Tuesday. There's no Wednesday, Thursday, and Friday for the most part, because all U.S. traders will be with their families traveling, and well, maybe Wednesday FOMC minutes will have some news, but pretty much everybody is already drinking, and they don't want to be trading. They're off. So that means, again, you have to look ahead. That means that they have to squeeze in all their fucking trading this week. They have to do basically, if they want to fuck off next week, they have to kind of finish all the work this week, right? So this week is probably going to be quite volatile for that reason, because everybody's prepping for the Thanksgiving, so their mind is already having eating turkey and having wine and shit, and telling Alex Jones stories to their mom and pop, whatever. And um, this week we're gonna have definite volatility. Anyway, so until Tuesday PPI, we are trading on technicals. On technicals, that means we just had for example, dollar yen open. It squeezed 100 pips. That's what it usually moves in one fucking day on a normal day. We just had an open that just squeezed 100 pips, over 100 pips, 110 pips squeeze just out of the fucking gates. So imagine how this week is going to be interesting. The only problem is gaps get closed. Very same way you have a fair value gap. You also have an actual gap. An actual gap in effects most definitely closes 99% of the time, and it might not close today, but it will close within a week for sure. So highly likely, if you like counter trend, you can sell here and put your stop above these highs, 140 something and change, and it's probably going to close. But what I'm interested in is not going against the spike. I'm more interested, and it doesn't matter what you look at. These spikes are absolutely on every single currency. So every currency, sorry, has these gaps right now, and you bet your bottom dollar when Nasdaq and S&P and the US 30 and gold opens up, you're gonna have same risk off gaps. Why? Well, because last week we had the CPI, the inflation data that dominated um, the news cycle, and it was in the psyche, and that's what was being traded in the heads of traders. Now that everybody has a very short-term memory, that thing is kind of moved to the side, and now we're having the main narrative is actually FTX, and more importantly, the effect the FTX fallout will have on the crypto market, and then all at the financial market, because now it's not a small little thing anymore. It's spreading, because there's a lot of people who had a lot of money with it and a lot of uh, connections to it. So all of that is a domino effect that keeps on going and going and going. Because, for example, if now we find out that Binance has problems or something, yeah, that will be probably the end of crypto market. Um, but there's all there. That's the narrative that is being now the dominant narrative inside the heads of traders. So hands for this risk off move. I'm not saying that. So I think, like I said, we're gonna close those gaps, and and then I would probably look for sales. Why? Well, because after last week we had absolute massive bullish rallies in pretty much all the asset classes. For example, let's take a look at dollar index. So this is the first time this trend line has been was holding up since last year. This year, sorry, February this year it started, And since we were started raising interest rates, this thing has been spot on. And this is the first time you have a massive. What the fuck is this? Hold on. Fuck this shit. This is the first. By the way, see the gap here, how it closed. Anyway, yeah. So this is the first time that we have a massive correction of this whole move up. As you can see, we never had well, let's see how much percentage wise we did the sell off here. 7% move pretty much, and usually we would do deepest one 4%, so double the usual correction. So that tells me that this whole leg that we started from the bottom is now being corrected. And if you do Elliott wave theory, which looks and counts waves to understand where you are in the market cycle, there's a wave 1 initial wave pullback, and this is a wave 3, a massive wave 3. So now we're correcting this whole move up. And the way the Elliott wave suggests is it usually ends in the vicinity of previous wave 4, which is this one here. So I think this is why I drew this thing here. It will basically go into 30th, and now this one whole leg up is being corrected. So what do you do? You draw fibs. You draw fibs from here to here. If you go on a monthly chart, you'll see it's one leg up. See, one clean leg up, and that's why I draw the fibs the way That's what I mean by clean legs, meaning it's one movement. See, for example. This move down. Oh, well, how do I make it more clear? When it has to be basically a congruent move within itself, and not some kind of chop fast, because this is one move, this is one move, this is one move, this is one move, and so on and so forth, right? So that's what I mean by one clean leg. So this is one move. This is an ABC correction. That's another move. That's another move. That's how you use fibs. You use fibs, measuring one wave, and this is one whole wave of movement. Anyway, so 38.2 is the minimum retracement we usually expect for a very powerful trend. In a trending market, they're not going to give you fucking deep pullbacks like 618 or 786 on a on a weekly chart. This is a weekly chart. One bar is 1 week, so this took fucking year and a half to complete. I mean, it might happen eventually, but not right away. So a weekly 38.2, you can see the confluence of this was previous top, resistance, support, blah blah blah, and I think there is an order block there. Yeah, so there's an daily order block there, right there. So giving all this confluence and all this bullshit, we basically expect a bounce. Maybe it'll drift all over a little bit and then bounce up. Where do I expect for it to bounce? There's an order block here, previous support, now resistance. So again, another confluence. So maybe we'll just go like this. I don't know. So you have this is an ABC correction. Let's go to weekly. So this is usually the corrective waves move in 3 waves. So this is a 1 and a 2 and then a 3, and then we're going to have a continuation for the last hurrah, which will be probably driven by the economy going to shit narrative. In any case, so I'll be looking to get longs around around this area. I'm not trading dollar index. It's the same thing on every other currency that's dollar denominated, plus or minus their own peculiarities. So, for example, on the euro dollar, same thing. As you can see, this is the one clean leg. If you go to a monthly chart, this is the start of the dip, and this is where it goes. I mean, even if you fib it here, let's say you fib it here, it's not going to change much where the 38.2 comes in. And again, you have a daily fib right there. Not daily fib. You have 38.2 fib and daily and a 4-hour order blocks. somewhere there. I think either 4 hour. Oh no, we're looking here. So right here, this one, and that's the refined order block. You might be coin that's the 38.2 that coincides with the Dixie dollar index 38.2. So it doesn't matter what, again, like what you trade. You don't have to trade the dollar index or euro and pound is going to be the same. New Zealand is going to be the same. Again, all these gap down. Why is everything gapping down? Again, the narrative switched from the CPI to fuck. Shit is breaking because of all the higher inflation, higher interest rates. No more hot money running into the system. All the fake businesses and the bullshit businesses are failing, including FTX, including Paladin, and including name whatever. Pick a business in Silicon Valley. Most of them, a lot of these stocks are 80% down already because no more hot money, no more. They don't produce a dime of profit, so nobody wants to carry an unprofitable business anymore, and that's why all these businesses either will have to get their shit together or fuck off, and that's why Elon Musk fired 50% of all Twitter staff because he's cutting costs. Twitter never fucking made a dime. It's been around for fucking 12 years or whatever, 15 years. Haven't produced a single cent of fucking profit, a single cent, which is ridiculous. But that's why he's cutting the fat and he's trying to make it profitable because he's not going to be injecting any more money into it. And why would you want to buy a car wash that loses you money? All right, you maybe carry a month or two or three, but at some point you're like, all right, this business is shit because it's it's losing money, not making money. All right, same principle. And all right, so again, with we have 25 minutes for the open. This is gold, for example. This is an unprecedented fucking vertical move. Usually, even here, when it was a lot shorter, when it happens, it retraced pretty much fully. There is chatter among commodity traders that COMEX is the exchange that services the gold futures in the United States, and that a lot of BRIC countries, BRIC, meaning Brazil, Russia, India, and China, they're the biggest. Basically, you have the West, United States, and Europe, and the BRICS are the new upcoming dogs. Even though they're still considered third world, well, except China, second world, but they are the opposing forces, so to speak. So they are buying up gold, and this is them buying because you don't even have any dips. They're just sitting, just scooping up, scooping up, scooping up to take the actual deliveries outside United States because this is what futures. They're buying the actual gold because yeah, they don't want to be subsistent on U.S. dollar anymore. And that's the rumor. But regardless of that, such price action is simply unsustainable, and that's why we see this dollar. So the same thing with the dollar, absolute fucking collapse, repricing due to the CPI being softer, repricing, and now you simply don't have any more sellers. Why would you sell dollar right here? You have to be a complete fucking retard, right? You would just sell even selling here or here or here? It makes no sense. So to find new sellers, market makers have to take the price back up and to create basically a favorable condition for new sellers to be interested. And where do you have one sec, no, the fuck. Anyway, I don't know. Let me quickly redo this. So you have why would you you're only gonna buy when you get a deal, right? Unless you're in a bind. So why would you want to pay for something that is completely overpriced? So not only you have over the aggressive price action, which is unsustainable, you also have waning momentum, as you can see by right here by our proprietary indicator. But if you drop in the even regular RSI MACD, you'll see that the momentum is waning. So a lot of traders will be this is the premium, this is discount. If you want to buy $1, you're buying at a discount. So this is a good area to buy, but it's not a good sell area to sell. You sell at a premium. So if you're selling a Mercedes whose worth is $100 and you sell it at $110, that's a good fucking deal. If you buy a Mercedes at $90, that's worth um, 100. That's a good deal. But why would you buy a Mercedes that costs? Why would you sell a Mercedes for $80 when you know you can get $100 for it, right? So right now, Mercedes is trading at $80. At least it needs to get to a fair price, unless you really have to dump. You're in the bind and you need to get out of it. You can wait. Majority of people can wait and get a fair price instead of dumping an asset for at a discount for no reason. So again, and the vertical price action like that, that's a gap of gaps. And like I said here, usually this is the previous week open, by the way. They took it up, reversed. This gap shall too be closed. This fair value gap or price inefficiency, liquidity void, whatever you want to call it. Those words describe pretty much the same thing. All right. So in 20 minutes, we're gonna have Nasdaq and S&Ps and gold and oil and all that shit open up. Um, oh, now I want to show you something. Hold on. This is a little more for the nerds. So this is a chart. What is this a chart of? This is a monthly inflation data. This is a monthly inflation data starting June 2020. The inflation started rising as we started printing money, right? This is the dip we are getting now with inflation printing lower. Now, what is this orange line? This is the Fed funds rate. In order for the inflation to subside, this gap between this and this has to be closed, and which is telling me that there's a long fucking way for Fed to close this gap still. Even if the inflation will be falling, the Fed will still be raising interest rates. If they're going to be keep even raising interest rates, maybe not as aggressively as before, because this whole reaction we got last week is not, it's pricing in the fact that it's not going to be as aggressive, but it's not taking into account that they still have a long, long, long way to go to close this gap between the real inflation. Well, there's not real inflation, the bullshit real inflation that they tell us, and the real funds rate that this is with a huge, huge fucking disconnect. So inflation is still going to be around, and they're going to be raising interest rates. And if they're going to be raising interest rates, there's no reason for US dollar to stop rising. See, so let me actually. How do I remove this? No, boom. So there is no reason for US dollar to is a monthly chart to stop. This is a knee jerk reaction into the pullback, and it's going to offer us a buying opportunity to because this is not the dollar has not topped. Maybe it can, again. This is monthly charts. It might tap for the next 2 weeks, and we might consolidate blah 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 for a month or two, but ultimately we still have one more. We have still more room to go because with the ever rising interest rates, the cost of finances will rise as well. And when cost of finances rise, shit breaks, and that's what we've seen in FTX, and that's why this narrative is now in the heads of all the traders. And as the previous chart showed you, the cost will only be rising, and as free money is evaporating faster and faster and faster. Uh, the venture capital funds and the private equity funds and Wall Street and banks don't want to carry dead fucking zombie businesses anymore. They're not giving them free money anymore, as Fed was when Fed was printing it. So all these businesses are going to start going out of business. So now you have higher unemployment because Twitter just fired fucking half the force. Google, Amazon, Apple. I think all major tech companies have at least 10 to 20 to 30% workforce layoffs, right? So now these people have mortgages to pay that they can't pay anymore. Now these more houses going foreclosures. The real estate market is going down on top of higher mortgage rates. So as you can see, all of this has a chain reaction that just spreads throughout the whole economy, and that's going to be the dominating um, thesis in 2023. For now, we might get a Christmas rally, all hunky dory, but as I've shown the chart before, we had very similar price action in 2008. We were doing this chop, deep pullbacks, chop, deep pullbacks. Oh, we're safe. Everything is safe. Bernanke, previous Fed chairman, comes out, says, "Oh no, real estate is fine. Don't worry about it." And Lehman is fine. Blah blah blah. And we bailing other banks out, and that's when the shit hit the fan. The actual shit hit the fan, and this is very similar to what's happening right now. So this is like the calm before the storm. So don't get suckered into thinking that just because CPI printed point 0.2 points lower, that's it. We won the war and everything is going back to normal. Nope. Nope, nope, nope. So be careful. Anyway, but that's like long-term outlook, which is important to have because it gives you understanding when you look at weekly, daily charts. If you get to heavy resistance zones, which technical analysts, whatever, old school Wall Street motherfuckers look at, if you find order blocks and all that, like right here, see, a nice order block. Maybe if we, yeah, right. So if we get somewhere like here, for example, and we pop, maybe that's a sell. Why? Well, because if you think that this is rose way too fast into a heavy resistance zone, given that the fundamental picture of the economy has not shifted uh, or changed, and maybe even changing for the worse, then there is no reason for this price action to just go there and keep on going higher. The chances are it's going to be exhausted here, and it was a bear market rally, and it's going to roll over and make a new low, taking out this low. And that's what big hedge funds do. They don't sit on the 1 minute chart. They just look at the daily, and they're Titanics, so they add to position slowly, slowly, slowly. Anyway, so 15 minutes to the open. Let's take a look at crypto. So we've been trading a little bit of a crypto on our Discord, and you guys should probably join it to take a look. For those who are watching this on YouTube and trading you're more than welcome to join. The links are in the description page. We actually share. There's a bunch of traders. We all share our screens. So you have 5, 6, 7, 8 traders all sharing their screens. And if you want to learn a thing or two, you can learn from scalpers to swing traders, from crypto to industry traders to forex traders. You can actually observe live as they take trades and do analysis. So I haven't personally seen a better educational way of learning how to trade than this, and it's something new, something we came up with, and um, this is as real as close as you're gonna get to Wall Street teaching you how to trade. Because back in the day in a bank, there was no courses. They gave you a bullshit course on trading, but forget about it. They would as an intern or a junior guy, they would just tell you sit next to this fucking guy, and all you would do is sit, and he wouldn't even talk to you. He would look at you like you're a dog shit, and all you had to do, you had to figure out within like 6 months what the fuck he's doing without him even saying what the fuck he's doing, and that's how you used to learn how to trade. Um, so this is as close as you're gonna get to very good education. You're gonna observe people watching their monitors, watching them take trades live, and all you have to do is have a few brain cells and start repeating after successful people. That's it. So a little promo for us if you guys are interested. Again, links in description. Anyway, so what to expect this week? With the first of all, I think we should close these gaps. I'm not going to play the gap close because I think this is way overdone. So you can easily go down and then close the gap in 3, 4, 5 days. So I'm not buying I'm not buying it yet. but I will be looking to sell as soon as the gap closes. I will be looking for sell because on all the currency, all the risks, because these were vertical moves, they don't last. So, for example, we had the same aggressive seller, for example, here, and this is the retracement you got. You have this aggressive sell of retracement, aggressive sell of retracement. So now, aggressive buying retracement, aggressive buying retracement, like a vertical buying is going to retrace. All right. So this is this, and then I'm already shorting some of them. So now we're shorting at some resistances, and these are good levels for me to get into the positions. Now, one sec. Let me see. All right. Let's see. All right. Yeah. So now we're gonna wait for 6 o'clock for the indices to open, and maybe we'll come back later today. But stop by Discord. We'll be posted. We'll still be live there. I just don't want to keep this YouTube and Trading View live going, but you can find us there, and the link is in the description. We can ask us questions, and we'll go from there. All right, guys. I hope it helps, and I'll see you there. Bye.